Okay, guys, I'm back. So, let's do this going forward. Um, a lot of the questions I've been seeing, I'm planning to answer later because I have a big list of all the ones people emailed in. So, right now, let's go ahead and if you have any questions specific to the trades I've made so far this morning, go ahead and ask them. And I'll definitely address them. And then once we're through that, we'll start moving into some of the questions on my list that cover a lot of topics I've seen out there that I've missed so far. When I exited SGYP, when did I start to cover? Let me get a chart up here for you on that. SGYP, so I had thought it'd be a straight up spike off the lows and then fade back off. And it had chopped around in the nines for a while. When I took my SGYP exit, was after it consolidated in the nines for so long without fading, and it broke through this 910 high right here. So this candle right here at 1135, that was my cover. I covered it exactly at 910. And I got it all out right at that price. And it never did completely squeeze. I mean, I got up to 926, but not the big burst up towards 970 like I was hoping it would have for me to reshort. And since then, it's just kind of chopped around, but not back under 9. And at this point, it's so unvolatile that I probably will not make another trade on it. I think the question here is asking, why do I typically look at stocks under $15? Like, am I more cautious on why? Because I said earlier, I'm more cautious on YRCW because it's over $15. And it's not that it's riskier or anything like that. The reason I typically look at stocks under $15 is because typically that's where you find volatility. That's where you really find the ones that have big intraday ranges. So when I'm trading something like YRCW that's up from 12 to 19 in a few days, I'm not necessarily cautious because of the fact it's over $15. It's because it's just a little more expensive of a stock and I have less familiarity there. I'm so used to playing the cheaper volatile ones, and with something like this, it just feels a little more foreign to me. So that's where the cautiousness comes from. My next question, what was my risk on OGEN when I entered on the, sorry, one sec, got a phone ring. When I entered on the 265 break. And my original risk was down to this dip low right here at 1030. So I was using about 20 cents of risk, I guess. But once it started consolidating and holding above the 265 area, that became, like, I very quickly moved my risk up, and that became my new risk level. But because I was using 20 cents a share of risk down to the last dip, that's part of the reason I entered only 10,000 shares. It's because 20 cents a share risk on 10,000 shares is $2,000, and that's kind of my sweet spot as far as risk is concerned. I don't like taking big losses or big losses. Give me just a second here. I'm already falling behind on these. What daily volume do I look at? I just said 1.3 million a day as being low. Generally, I like to be a stock that at the end of the day is traded, I think, more in terms of dollar volume than number of shares. So I guess I'm usually looking for stocks that have traded at least a few $1 million of volume. But the other factor, and I get into this in the DVD a little bit, but it's number of trades that it's had. And I explain that when I go through my scanners and everything. So because that's more of the true test of liquidity, is how frequently are trades going through, how many trades are going through on the stock. Reasoning for not shorting RJET around 527, because I was hoping it would go higher. That was a great area for a starter. I should have been starting in there because I said the resistance area that I was looking at was 525 to 550, and it had gotten to just the low end of that right there. I was just trying to be a little bit too perfect. So, I mean, I could have easily taken 5 or 10,000 shares to start there and then added more aggressively if it had gotten higher. But it was just me being a little more selective than I had to be, I guess. Would YRCW be a short into this bounce? I was thinking about it. I mean, that was a really hard crack off of the 1950 area, and this has been a very lethargic bounce so far. It hasn't been able to get past 1925 about. So you could look at this as a lower high on YRCW after earlier lower highs, and maybe short in anticipation of a rollover and crack of 19. But this is another stock now where it's just not that volatile. I'm not sure I would want to take this trade and be trying to make just a few percent. And now it is actually perking up a little bit more. Looking at RJET right now, is that an ABCD long chart pattern? If it starts to put in higher lows, then yes, that starts to form an ABCD pattern, where the idea is you would be buying higher lows with the risk off of, I guess this little dip under was to 497. Why didn't I add to my YRCW position when it was closer to 20? Because it had been a slow grind up there, not a fast spike. The nature of how I got up there made me uneasy. Fast spikes, I feel like, are a lot more likely to fail than slow grinds. So I was okay to sit on my short still and keep to my risk, but I did not want to increase my risk shorting into this. Do I have any short left on YRCW? Yes, I have 1,000 left from 1910 still. I could have covered that down near 19, but I'm being a little more patient, and I'm looking for a 19 snap later today. What do I mean when I say squeeze or consolidate? Consolidation is a period of sideways price action, kind of like we're seeing right now in RJET, where it's been hanging between about 510 and high fours. It's just kind of choppy and sideways and deciding which way it's going to go. That's what I mean by consolidation. When I say squeeze, I mean a fast spike up like this was from 480 to 527 in a span of about 15 or 20 minutes. It was a fast upwards move. And stocks really don't go straight up or straight down. After a big straight up move, you're going to need that period where it pulls back for a little bit, it goes sideways and consolidates for a little bit, and then either ramps back up and resets and breaks out to new highs, or it breaks down further. So consolidation, that's part of the reason I stay away from consolidation as well, is because I rarely have a good feel for which way it is going to break out of the consolidation, unless I have a daily chart that I think is really in my favor, and big picture I think is in my favor. That really will help form my bias in some cases. So with SGYP or any other stock, if I see the type of consolidation for half an hour or more, will I sell? No, not always. I mean, again, it all boils down to, is my risk level breached or not? It may make me less likely to want to add to my position, but generally I will try to stick to my risk. Some of these questions are getting a little general again. Please any questions right now, keep to specific things about what I traded today. And we'll get into some of the more general stuff after that. When covering the short on SGYP, I didn't wait till I touched the 920 risk. How did I know it wasn't just breaking 910 and still coming back down? Yeah, I guess that one I did kind of do the opposite is what I did in YRCW, because even though it was breaking past the high of day, it still did have that 920 area overhead that I said was going to be my risk. With SGYP, it was just because it had done so opposite of what I had thought it would or what I wanted it to. It very easily, I guess it did basically top out in the 920s and now is fading a little bit, but the fade has not been at all severe. I just get really cautious after a big morning spike straight up if the stock is going sideways and not breaking down like I expect. So it was just more like it felt really wrong to me in the moment, and I decided to be safe instead of crossing my fingers that it didn't squeeze up to 970 and wind up in a stubborn position that I was down a few $1,000s on. What do I think of OGEN right now? I just took that off my screen, 1 sec. Probably this 275 area really matters to it. It's had a couple little perk attempts here that have failed now, even that ramp off the lows. Hard for me to be interested in it at this point though, because it's trading kind of illiquid. Volume has been fading off. If I had gun to my head, had to make a play on it right now, it would be buying because it's into a dip, and it'd be risking off of 255. Like maybe this is the first high or low on an ABCD setup, and I'm only 5 cents a share off my risk. I don't trade ABCDs very often though, so I don't see myself taking that trade. If OGN had not broken out, would I have considered selling it before my 245 risk area was hit? Or would I prefer waiting for a bounce from down there and then selling? I mean, in the first half hour to hour, I don't think I would have considered selling unless my risk level was breached. But if it had consolidated for a while and just shown no signs of strength or no signs that it might recover, I probably would have gotten out before the risk level in that case. You'll see, like, this OGEN breakout attempt is very similar to pretty much all of chapter, gosh, what is it, chapter 7, chapter 8? I think it's chapter 8 of my DVD. I have a whole chapter on buying listed breakouts. And you'll see some where they don't work, and I have to cut a loss. So that should be really helpful in understanding how I handle breakouts, both when they're working and when they're not working. For all the trades I did today, how often did I look at the level 2? I've had the level 2s up with the charts all day, but it hasn't been a huge focus point for me. I do tend to watch the chart a little bit more. But I'll glance at the level 2s, I'll look to see if there's any big bids, big offers, anything like that. But reading level 2 is a much smaller piece of my trading with listed stocks compared to OTCs. My DVD is not strictly shorting. We had a question on that. There are long setups in there too. It's not quite all of the long setups I've done over the past few years because I thought it would be insanely risky to include a chapter on OTC bounces, because if you mistime an OTC bounce, the door is just wide open to disaster because of execution issues. But yeah, you get both longs and shorts. ABCD pattern is something that Nate talks about a lot. I know it's covered in his DVD. I don't really cover it because it's not something I trade. I don't trade it really. What stock did I feel the most safe on trading today? And were there some that I didn't feel safe on? That's a good question. I mean, I felt safe with all of them. I really did. Because with all of them, I had a plan. It's funny because the trade I think I felt the most uncomfortable in was the OGEN trade. Because that's just who I've become as a trader. I'm just way less comfortable long these days. And I'm not saying that that's because longs are worse setups or anything like that. It's just who I am. And it's what I've developed into over the past few years. So as far as, maybe losing money goes, though, I was comfortable with everything because all of them, I knew my risk. I felt very in control all day on what I'm doing. Do I ever become bored on slow days like today, and what do I do to prevent myself from trading out of boredom? Usually I'll stream a TV show on one of my screens or something like that, or just find other work to do. That's really about it, I guess. Part of the discipline is, learning not to trade when there's nothing there. For YRCW, don't you run the risk of squeezing your breakout if you just wait all the way till high of day, or will you just cut before that? I mean, yeah, I'm definitely running a risk right now with YRCW not taking this other half off. It could save 19 again. It could ramp back up towards high of day later. But because I downsized earlier, and even if I hadn't downsized, I mean, that $20 risk is the risk that I've been comfortable with all day long. I had sized in appropriately for that being my risk level. So it would stink if I had to cut up there. I'd be kind of annoyed that I didn't cut it down here when it was lower, but I'm giving my play a chance to work. I'm trying to stick to my setup and have some conviction in my trade. Why didn't I short OGEN? Mainly the liquidity. It's lower volume, and I figured if it really did get ripping, it might be kind of tough to get out of. And overall, I don't generally like shorting stocks the day of a breakout. So that's the other thing. Big picture setup, it's a breakout. So I probably should stay away from short selling that. I don't know if I'll cover YRCM before 3 p.m., but I'll cover it before close. At what point would I consider shorting RJET? I've probably missed the play at this point. Maybe if it had a perk attempt up towards 520, I'd short, risk it off of 527, the high of day. Hope that it stuffs and then heads towards new lows. Quick pause to give a shout out to my fiance Donna for bringing me coffee. That is what is keeping me alive and going. So everyone say thank you to Donna. Clarifying question here was, so I don't look for a play on OGEN. I assume you mean a short if it breaks down under 255. No, I don't. I really just do not like shorting weakness. I feel like at least 2/3 of my headaches come from shorting weakness. So I'm trying to just break myself of it completely. I'll miss some plays because I won't do it. And this goes more for listed stocks than OTCs, let me clarify that. But yeah, I think with listed stocks, I'm really just trying to get back to my short strength or sell strength by weakness and just leave it at that. Someone asked if I see any afternoon plays popping up on radar. Not really so far. I would consider a VLTC long. It's been holding up pretty well. This is forming a little bit of an ABCD pattern. I mean, if I were more of a dip buyer, I'd probably be snagging VLTC dips with risk off of the 860 area. Maybe more like 850 since it had that little crack under 860 briefly at about 1145. But this is one where, big picture, it got through a key resistance level on the daily chart, and it's a Friday afternoon. It could definitely rip into the close. So that's one I would consider, but at the moment, I'm not too motivated to take that trade. Again, just more because of my comfort and who I am as a trader than anything. Other than that, I don't see a whole lot new out there. Yeah, unfortunately not. I mean, we'll see if Jivo or anything can do a surprise squeeze into close. On RJet, what price was I waiting for before I would have started in short? I wanted it to be pretty close to my 550 risk level. So I think I was waiting for 530s and then really size in the mid to high 540s. If it had gotten that high, I would have gone big. Do I still spreadsheet my trades like I mentioned I used to do in the past when I started? No, not as much anymore. Posting to Profitly is kind of my version of spreadsheets now, where I go through the trades one by one and kind of remember what I did right, what I did wrong. But I do still use spreadsheets to try to track new setups and figure out if I can find any kind of an edge. Question is, would I be comfortable shorting iTech right here? I actually lost that one off my screen. Let's see. It's into a weak bounce right now, but it's not up that much off of the lows. Short sell restriction is on, again being a Friday. And volume has really faded off since 11 o'clock. So I don't think iTech is one that really catches my attention, although it very well could fade off and break down more this afternoon. It does kind of have a very weak chart pattern look. Do I normally take time off after 11 till 3 or just watch stocks all the time from 9 to 4? I watch all the time, but I will definitely be, like I said earlier, I watch all the time. If the setup is there, I will trade it. But just kind of the nature of the market is that setups usually aren't there midday. So it does result in there being less to do. Someone asked me to briefly explain ABCD, so here's my attempt at that. Remember, this is more Nate's thing than mine, so I could have something wrong. So the idea between ABCD is there's 4 parts to the move. The A part is the initial spike. So in this case, let's say 480 up to 527 on RJet. The B part is the fade back, where it sets its low. So in this case, B is the fade back all the way down to this 497 area. C would be as it starts to grind back and build back up and set higher lows. And I think the way Nate teaches ABCD is that while it's in that little grind back phase, setting higher lows, you buy during that period and you risk off of the low it set during B. And then D finally, it would be, it builds back up to the highs, breaks through and breaks out. And obviously some of them are not going to make it that far. But that's my basic understanding of ABCD. And it involves buying dips, it involves buying during consolidation. And like I said, that's something I'm kind of a wimp when it comes to, which is why it's not really a big part of my trading arsenal. I'd rather wait till the D in a lot of cases and buy it as it's having that strong breakout. But I can also understand the appeal of the higher lows and having your risk closer to that bottom. I just think it's maybe a little bit lower odds of a setup. But if you get really good risk reward out of it, it's okay if it only works 50% of the time or 40% of the time. If the times does work, you're making 3 to 1 or 4 to 1 on your risk reward. So that's the basic idea behind it. All right, I'm going to scroll through really quick, see if there's any more specific questions on the trades I took this morning. Oh, there's an SGYP crack. So, now maybe it fades off the rest of the day. Maybe I'll retry short on that into a pop. But RJet's fading off now too. So this would be an ABCD failing, I guess, although I'm not sure you ever could really say it was in the higher lows phase. SGYP, what chart should I knock out for that? Probably RJet, since I missed that play. So yeah, it just dipped below a couple consolidation areas from earlier today. So yeah, this is one I definitely could try, maybe shorting a perk, risking off of the higher day, and then hoping it fades back off down to the 860 area. This could definitely get ugly for the next couple of hours. I'll monitor it. I'll let you guys know if I make a play. All right, so one sec here. I'm gonna scroll through some of these questions really quickly for anything specific to this morning, and then we'll go through the list of what you guys sent in. Give me just one sec to go through those questions. Okay, I have looked through most of the questions up till this point, and I don't really see anything else specific to this morning's trades. So I think I've gotten that all covered. I guess one question that kind of applies is someone's asking for some clarification on why am I thinking fade into close on YRCW if it is a Friday afternoon, and that whole Friday effect might be in play. And I mean, that's a valid question, but overall, you know, the chart is still weak. I haven't seen any kind of a sign of reversal. I mean, we'll zoom in here ever since the little wipeout down to 19 it had, and it bounced back up to 1930-ish, and now it's faded right back off again. So if I start to see some kind of a reversal in the later afternoon, where maybe it breaks past 1930 and gets above this high that had failed last time, then maybe I say, okay, it's time to get out the rest into a dip, and I take a small loss on everything, because then I would want to be a little more cautious, like, okay, this just showed that it's not going to crack under 19, that it is reversing, and it's a Friday afternoon, and now it could squeeze. But as long as it's a bearish pattern, as long as this lower high here is holding, I feel pretty comfortable just sitting back and giving the chart a little more time to work. Would I have traded the same trades today if I had a small account? Let me think. What did I trade today again? I might have been a little more reluctant on YRCW because it was so expensive, or even SGYP because even as it had that morning spike, I thought it might fade back off, but I was looking for a 4 to 5% profit. If I have the smaller accounts and I'm looking for volatility, stocks that have 20% range, 30% range, crazy ranges, nothing today fits all that well. Maybe, I definitely would have bought the OGEN breakout because I would have thought, hey, there's some serious potential here if this can get running. And from the 265 breakout, it did get up to 290. So that is about a 10% gain right there. And that's on one that really didn't work all that well. So, yeah, maybe the higher priced stocks I would have been a little more reluctant to touch. But OGEN I definitely still would have been interested in. Where did I spot OGEN from? From you guys, actually. Someone mentioned it, said it was close to the breakout. The liquidity, I didn't really have it on my radar. Like, it's on my scanner now. I would see it now if I hadn't seen it earlier. But this morning, it had fallen off my radar. I was watching too many other things. So I probably would have missed that trade if someone hadn't brought it up. Someone asked if I want to spin the wheel and guess where OGEN goes next. My guess would be up. I think it's probably going to have a strong close, given the fact that it's held up so well. And down here near these levels, gosh, it still is a tempting dip buy, isn't it? With 255 risk. Maybe I will do that. I don't know. It's still a little bit early in the day. I'll give it another half hour before I decide. Because this hasn't exactly been a strong perk through 260. But yeah, you take everything into consideration, the Friday effect, the fact that it's a multi-day breakout that's holding right around the breakout level very well into dips. This is this is definitely a candidate to come back into the close. But I'm going to let it develop just a little bit longer. Because it is back under that 275 area, and it has failed there twice now since it broke under. So I think the odds would be a lot more on our side even if we waited for a break through 275 and then started snagging dips after that with the risk down here again. Okay, well, now I am going to start jumping into some of the questions you guys sent in. And just to bear with me because I know I answered some of them already. So I'm going to try to skip over the ones that we've already touched on. So, and as far as questions in this chat box go right now, I'm not really sure I'm going to do this now because it's going to be kind of difficult going between the two. I'll try to keep my eye on this main chat box as I answer these questions you guys sent in beforehand, if there's anything that needs clarified, but if I'm getting way too many questions, they're gonna get buried. So I'll do my best. First one is, what do I know now about day trading that I wish I'd known when I first started out and couldn't have actually learned from just watching videos and DVDs? And I think what I was totally caught off guard by was the emotional side. The fact that, I had studied the charts, I had studied the patterns, I understood technical analysis. I felt like I had learned so much in that 3 months that I was just watching and learning. And then just the way it felt when I was in those trades in those early days, when I actually had money on the line, the way my heart rate would just explode and I would just get so emotional with pushing buttons. It was just absolutely crazy to me. I had no idea I would encounter anything like that and the effect it would have on me. So that also goes along with what I was talking about with paper trading earlier. It just is not the same. So that fear is something I wish I had been a little more prepared for, because I think it would have influenced me in my early days to be a little more conservative than I was. And the other thing is that I didn't need to trade every single stock that moves, because that is what I started off doing. I started off trading, like I said, 7 or 8 different setups. I was trading OTC breakouts. I was trading earnings winners. I was trying to short sell. I was trying to do just a number of different things that I probably had, 30% understanding of on all of them. So I really wish early on that I had heard, just focus on 1 or 2 areas. Just keep it simple and really narrow your scope and get really good at 1 or 2 things. Accept that you're going to miss everything else. That is okay, because those will be there when you're ready to branch out and move on to them. When I was first trading, did I establish any sort of mastermind alliance with my peers or anyone I followed? I'm finding that I'm kind of trading as a lone trader, and I'm wondering if most traders work like this. I've kind of shifted a little bit in that regard, because when I first started, I really never received any kind of special one-on-one mentorship. The closest I got to that was from Michael Good, and I'm eternally grateful to him for it, because he was a moderator of Tim's chat room, and I would go to him with questions about, how he got in early on a promotion, or, maybe a couple clarifying questions about level 2, but he was always there to answer those questions for me, and that really helped point me in the right direction. Now, once I had developed a little bit more and started to have success and my confidence grew, there was a period of time where I was trying to help out some other traders, where I was giving a lot more focused attention. I remember back in my early days, I made some OTC video lessons and stuff like that. I was trying to teach my uncle. There were a couple people I had met online that I was trying to help out. And that role as kind of being a teacher and trying to explain what I was doing and why, I think reinforced a lot of ideas in my mind, where I think I've heard some sort of saying before where it's you truly learn something once you teach it. And I think that's true in a lot of regards to what happened to me, because my profits definitely accelerated after I started doing that and really started trying to, just like I said, help others and teach what I was doing. So I think that finding other people to trade with, other people to talk to run ideas by, I think that's really good for traders. Do I ever use fundamental analysis or focus strictly on price action? I answered that earlier a little bit, but no fundamental analysis for me. I don't care about the earnings. I don't care what the news is. They can blow smoke up my ass all day. It doesn't really matter. I'm looking at the chart. I'm looking at the price action. I mean, that is what matters to me. Money is what moves markets. That is my kind of philosophy and theory. You could have a stock. I mean, how many times have you seen it where a stock puts out earnings that you think look like good numbers? They look like good earnings. And then the stock drops all day. And maybe that's because a major holder of the stock, like someone who has a lot of shares, is taking that opportunity to sell. Maybe they want to get out, turn their shares into cash. So big money is what controls the markets. And I use charts to figure out what the big money is doing and to anticipate what's coming next. And that's why price action is where my focus is. Also, on top of that, there have been a couple times in the past where I have been a little more fundamentally aware that oh my gosh, this company is trash. And I put myself in a big short squeeze situation because of it, because I get so biased against the company. I start ignoring what the chart is telling me. I start ignoring that, hey, there's a breakout here. This is starting to look like it could be a parabolic spiker. And I just keep thinking to myself, but the company sucks, but the company sucks. And then next thing I know, I'm massively underwater. So I don't want to let myself have that bias. I want to trade based off of what the chart is telling me. Oh, good clarifying question here. So if I'm worried about what big money is doing, why am I putting more weight into the charts than into the level 2? Because with listed stocks, you see a lot of level 2 games. Here's something that I always think about with level 2. That I kind of ask myself this question. if somebody really wanted to buy a massive block of shares, why wouldn't they just hide their size? Like if sometimes you'll see those huge bids in a stock. Like if someone really wanted those shares, why have that number showing? You could just hide your size and fill a little bit at a time. I usually think that big bids or big offers are attempts to manipulate the price. A big bid is somebody who wants buyers to see the big bid, react to it, say, oh my gosh, look at that massive bid, and then start buying so that then they can sell their hidden size on the offer or something like that. And then either fill that big bid themselves or just pull it out so that it doesn't fill at all. Like when I see that huge size, I just usually assume there's some kind of ulterior motive here. Somebody's trying to mess with this. So usually I worry a lot more about what the chart is telling me than what the level 2 is telling me. Quick side note, VLTC, yes, it did just crack. It is having a quick drop. If there was a decent rebound back up to the 860 area where it just snapped from, I would be tempted to short. I'm not going to chase the weakness and short sell down here though. A question here was how my strategies change during the day. They don't really change during the day. I guess if there's any change, it's that I'm more likely to buy something in the afternoon after it's had a long day of consolidation than I am in the morning into a spike. But otherwise, I'm usually looking for the same things, spikes into resistance, lower highs to short, things of that nature. So the overall strategy really doesn't change all that much throughout the day, I don't think. I think it is time to take off my YRCW. I have a cover order in at 1925. This is exactly the kind of perk I was talking about that I did not want to see. I got 300 of my shares filled at 1925. Hopefully I can get the rest into a dip. But I'm going to be done with YRCW, and if I fill the rest here, it's going to be about a $450 loss. Better down here than up at $20 though, and just like we discussed earlier, being a Friday afternoon. Maybe this perk fails, but I don't really want to take the chance on it anymore. I have given this stock more than enough patience, and it just never quite gave me what I wanted. I'm currently paper trading to learn, and will start trading with a $4,000 account once I have proven to myself I can be profitable. I see that a lot of gurus trade large position size and are happy with 0.5% or 1% moves because that makes them a significant amount of money. However, on a small account, brokerage fees will eat quite a lot of the profit. How would you trade a small account, given that on a small account you need to take on more risk and probably go all in most of the time? You're absolutely right, and I do touch on this in the DVD about, and we talked about it earlier too, how volatility is very, very important to a small account. Now, putting the entire account on the line, going all in, I try not to get so much caught up in the amount of money I have on the trade, but more what is my dollar risk based off of the level that I'm playing off of and the size that I've taken. That's more of concern to me. But you're absolutely right. Like a small account does not want to trade something that has very small movement. That's just useless to them because commissions are going to eat them alive. So, I mean, I guess my best answer to that question is yes, stick to volatile stocks. You're on the right track thinking that way, because even if the stocks go your way when you're trading the more expensive ones that are less volatile, you're just not going to have that big of gains because you're not going to be able to overcome commissions. There's a question here, what trading size would I recommend to begin with? I'm not really going to answer that here. I talk about it a little bit in the DVD. As far as what size to play, that relates a lot to who your broker is, what your commission structure is. And there's a lot more detail in that in the DVD that you can check out tomorrow in Chapter 2. What trading books do I recommend? Unbelievably, I have not read a trading book yet, which is crazy to me. It's one of those things I keep meaning to do but never getting around to. If I were to recommend a certain type of trading book, it wouldn't be one that's trying to teach you trading setups. It would be one that's trying to teach you trading psychology, how to think, how to overcome some of those emotions. I know I have a book that's been sitting on my coffee table forever called The Daily Trading Coach. I can't think of who the author is now off the top of my head. I think it's like, oh gosh, I can't think of it. Starts with an S, his last name. Someone else recommends Trading in the Zone by Mark Douglas. So eventually I'm going to get around to reading these. I really will. But for now, I can't really recommend something that I've read, but I can at least point you in the right direction of what I think you should be looking at. It's Brett Steenbarger. I think that's how you pronounce it. And the other one is by Mark Douglas. Trading in the Zone by Mark Douglas. When people enter a short position, where do they show up to enter on level 2, the bid side or the ask side, and how about when exiting? Unfortunately, you can never tell if somebody is short selling or if they're just selling a long position. There's really nothing to tip that off. And by the way, I got covered my YRCW. That's a $450 loss overall on the day for it. And I'm currently flat all around with, oh gosh, what am I on the day? About 2,000 on the day. And hopefully something else comes up to trade before the day is over. But anyway, you can't really tell when someone is shorting based off of what they're doing on the level 2. Where someone puts their order is entirely up to them. I mean, if I really want out, I can smack the bid. If I'm willing to be a little bit more patient and let it come to my price, I can put my cover order, or I can put my sell order on the ask and let it come to me. So it's, I can't really give an overall answer to that. It's just a case-by-case basis and people's personal preference in any given situation. Okay, someone's asking again about ETC and Wedbush. Let me try to explain this a little bit better. Different brokers will settle their trades through different clearing firms. Think of a clearing firm as being like the next notch above a broker. Now, some brokers will have the same clearing firm. So you have a SureTrader account. That means that the clearing firm SureTrader uses is ETC. So if you were to open a Centerpoint ETC account, you would have the exact same borrows in ETC at Centerpoint as you would at SureTrader. Now, Centerpoint has another clearing firm called Wedbush. And Wedbush, they're going to have different borrows day to day than ETC will. And maybe they'll also restrict different stocks. For example, today, VLTC, it was restricted at Wedbush. It was not restricted at ETC. So, it's just case by case specific to clearing firms. So when I say I have 2 clearing firms with Centerpoint, that's why, because I like to have different borrow options so that if I can't get it at one, maybe I can get it at the other. So I hope that clears that up a little bit. Follow up to the last question about selling on the bid or ask. Let's see. Sorry, one second. I have trouble understanding how you sell on the ask. I do understand placing an order above or below the market and waiting for the price to come to you. Is that what's happening? Or when you route through NITE, are you essentially acting as the market maker for NITE and thus are able to sell at the ask? Yeah, I mean, it all depends where the, right now, let's say take YRCW for an example right now. If I had shares that I wanted to sell at YRCW, the bidders are at 1933, the sellers are at 1934. So I have a choice. I could either hit those guys at 1933 who are sitting there willing to buy on the bid and get an immediate fill, or I could say, hey, I want a penny higher. I would put my order at 1934 on the ask. I'd probably route it through ARCA, so it would show up and I'd be acting as the market maker ARCA on the ask at 1934. And then that order would just sit there until some buyer came up and hit it. So I hope that clarifies it. Okay, here's kind of a question on emotions. Let's say I see a stock up many days in a row, and after a clear red day, my bias is that it'll have another red day. So I short following my rules. My short is wrong, my stop loss gets hit. I repeat short at next possible entry according to my rules. Again, stop loss is hit. At this point, fear starts. Normally a third try would make me back losses, but fear of being wrong takes over most of the time. In this situation, what is a good framework to either stay short biased or change and go long biased or stay away? I will caution on this first of all. I hate changing my bias on a trade on the same day. I feel like every time I try to do that, I lose. Where maybe I've tried shorting 2 or 3 times, I've lost every time. Finally, I say, screw it, I'm going to buy. And usually that's the trade I lose biggest on. So I usually say if you go into the day with a short bias and the short just is not working, you're better off to just stop trading it and just leave it alone rather than try to long and make back your losses that way. Now, as far as trying a third time or a fourth time or a fifth time is concerned, if your first couple trades fail, I mean, just ask yourself, is the setup still there? Is the stock still, underneath a key resistance point that you might want to play off of? Can you still take a short with your risk level and an acceptable price away so that you're not going to lose too much money if you're wrong again? Those are the things I think that would impact me to keep going and keep trying or to just give up. So sometimes it's best to just take a step back, look at the overall setup again, and say, hey, do I still think this is a short? But just because your short loses the first time or the second time does not mean you have to just keep on shorting it throughout the day. So I just really encourage you to always reevaluate the setup. When I was first growing my account, did I swing my account most of the time, or were all of my trades largely day trades? If yes, what was the ratio of day trades to swing trades? I definitely tried playing gappers now and then back when I was still growing if I felt like I had an edge. There were a couple promoters who had pretty consistent gap ups on their plays from day to day. But for the most part, I was in and out same day. I did not like having the overnight risk. And that's something that I'd say has become more and more true as my trading has gone on. A lot can happen overnight. I've been caught in a couple halts before with OTCs, and it's not a fun feeling. So generally, I like to be out before close nowadays and just not have to worry about it. I'd rather miss a few cents a share and restart the next day. So I would say back when I first started, I was probably swinging about a quarter of my plays, and it's less than that now. There's one I've answered already. Let's take a look at the chat really quick, see if I've missed anything in here. Someone asked if I was able to locate VLTC through Quantex or the locate monitor at Centerpoint. I was able to at ETC. I was not able to in Wedbush. In Wedbush, it said restricted. Clarifying questions on level 2. Watch the level 2 segment tomorrow in the DVD. That's very clear, and it will show you exactly what red prints, green prints, things of that nature mean. What do I think about iTech at this point? Oh man, it still is a really ugly chart. I would maybe short pops, risk off of the 1350 area, since I spent an hour hanging under 1350 and couldn't break through. If it snaps low a day, it could flush much more. Hard with SSR on, and it still is very, very illiquid ever since 11 o'clock. But yeah, if I were to be short iTech, it would be with 350 risk. Okay, back to the questions sent in. Here's a question about how to predict stocks that are going to spike ahead of time. Not something I'm good at, unfortunately. Sorry about that. I mean, like I said, I'll see the stocks gapping up pre-market, and out of the ones I've tracked so far, only, 18% or 15% or something like that are closing higher than they open. So, I mean, maybe that means they still have morning spikes, but that's part of what I've been tracking with these, and that's part of what I'm trying to figure out. Is there some kind of trigger point I can find in the first 5 to 10 minutes of market action that says, hey, this is a buy, get in for a quick spike? And so far, I haven't found a super reliable answer. But I'll continue to monitor that, and if I ever do start to see a pattern, I'm going to let you guys know. Because I do want to expand my longing arsenal. I do want to get better at that. You had mentioned previously new traders should focus on learning 1 or 2 setups that they're good at. How should these traders go about studying these setups and learning how they work? Well, first of all, I think trading them is the best experience. I mean, sometimes you'll make mistakes, but you can learn from those mistakes when you're trading with setups. But if you see something that ahead of time you say, hey, this fits the ABCD setup that I want to try to learn, for example, well, then save the chart at the end of the day. Look at what points mattered. Look at why it might have failed or why it might have been successful. Saving charts and referring back to them can be very, very helpful. I mean, once you have 20 charts of stocks that were ABCDs you tried to buy, you can go through those charts and you can potentially learn a lot from them. So I definitely recommend saving charts at the end of the day. You've studied Tim Sykes' lessons extensively. What lessons do you find to be the most critical in relation to your trading success, and why? I think most critical to me back when I first started was I was watching a lot of his lessons on longing stocks, longing the OTCs, like longing breakouts or things of that nature, because I think I did mainly learn the breakout setup from Tim when it came to OTCs. I mean, I remember that was one setup that really clicked with me that I saw in his Penny Stocking Part 2 DVD. And then I just also would watch the video lessons to drive that home. And that's an example, again, of kind of picking a niche to focus on, and that's how you do it, is I knew I wanted to play breakouts. So I wasn't really watching his videos on short selling. I just went through his video lessons, and I was starting to pull every single one that had to do with buying a breakout. And I would watch that and to see every example that I could. So, I mean, I think that was critical in getting me along the way with my breakout setups. But I mean, from there, I guess from there, I kind of branched out on my own a little bit. Buying new promotions, I think I mentioned that wasn't really due to any kind of video lessons. I mean, like I understood the basic idea of, hey, you want to buy a promotion early, but the idea of how to really execute them, where to route your orders, things like that, that info came from Michael Good in the chat room. So my trading strategies have really just been bits and pieces of things that I've learned from everybody, from a lot of different mentors. And yeah, I apply what works for me and branch out from there. Any advice on how to grow a small account since I'm more short biased? I tend to enter a little too soon and get squeezed out, and 5 minutes later my plan tends to pan out as expected. My broker is IB, so one of my challenges is shares run out quickly after they open. This is a factor for me entering a little too quickly. Yeah, that is the problem with Interactive Brokers, because they aren't like SureTrader, where a stock is either easy to borrow all day or you just can't get any shares at all. Interactive Brokers will sometimes say like, hey, there's 50,000 shares available of this stock today, and then it's first come, first serve, and those shares do run out. So the problem there, and part of the reason I don't like them anymore, is because it does force entries. It does force you to lock in those shares at any cost, especially if it's one that you really want to short sell. And I just hate trading under conditions like that. I think that the best bet is really to go somewhere like SureTrade or Centerpoint ETC or something like that, somewhere where you don't have that kind of a pressure on you to take a trade. Because if you're trying to trade just so you can get the shares, you're not trading off of the chart. And if you're not trading off of the chart, you're trading for the wrong reasons. Someone said, I don't think E-Trade lets you hide your size. That could be why some orders show large size and it's not just attempted manipulation. Yeah, that's true. I am aware of that some brokers do not let you hide size. But I guess I'm talking more about the really extreme examples where you'll have a stock with 200, like yesterday RJET had 200,000 shares at I can't remember exactly what price it was. Maybe it was around 5 even. But I just remember a huge 200,000 share bid on RJET. And I really doubt anybody using E-Trade has that kind of sized account. If someone's trading that kind of size or that professionally, you would think they'd be with a little better of a broker. And here's one about short sell restriction and shorting on Fridays, and I think we've talked about that a lot today, so I'm going to skip it. So now we'll get into some questions that are a little more focused around emotions. How do you manage your day after a loss in the market open? In a good ticker, which we were watching from last night, do you continue on that ticker or switch to other tickers? Purpose of this question is, how should we manage frustration in the morning? That is a good question because, again, it's one of those things that easier said than done, where I say like, oh, well, if you're frustrated, you should take a step back and walk away. But that's not always the easiest thing. Sometimes you're going to have those mornings where you had a setup that you really liked and then you trade it and it just doesn't work and you take a loss on it. Now, I think we talked a little bit earlier about whether you should maybe try on the stock a second, third, fourth time or not. And that depends on, when you take that step back, if you're really honest about like whether the setup is still there or not. And if the setup isn't still there, there's no point fighting the stock all day. So in a lot of cases, I will try to switch over to other tickers. One thing I've started doing recently is I talk in the DVD about hiding my unrealized profit loss because I don't like seeing how much I'm up or down while I'm still in a trade. Recently, I've been hiding my realized profit loss too. I don't want to see how much I made or lost, because if I lose $3,000 on my first attempt to trade a stock, I don't want to enter the next trade saying I need to make $3,000 on this to get back even on the ticker. So I'd rather just not know until the end of the day how much I've made or lost. And it's a little bit easier for me to keep a clear head that way, because that way I'm still just more focused on the chart, I'm more focused on the setup, and I don't have that number staring me in the face of what I need to make back. So I think that's helped me a little bit with that morning frustration. And any tips on how to look at a chart with a fresh mindset after making a loss on it? Oh gosh, let me think about that. I'd say start by zooming back out to the daily chart. Zoom back out to the daily, see what the daily looks like, and ask yourself, is the big picture still there? Like, does this still look like, oh man, YRCW, there's the crack. That's frustrating. And now I'm curious, I'm just gonna look something on this really quick, sorry. So I guess it did perk through 9:30, but the perk stuffed 4 cents later, and then now it's doing this. Oh well. I traded it safely. Anyway. Yeah, just start by taking a look at the big picture again. Sometimes I need to look at the daily chart again. Like, something like OGEN. Right now it kind of looks like a weak chart. But if I look at the daily for OGEN, that kind of reminds me, hey, this is still a stock that's above the high from 2 days ago. It's right near this breakout level. It still could be a nice green candle and a gap up and continuation on Monday. So I kind of helps to take that step back and reset. And if I had lost on OGEN the first time I tried buying that breakout, I could say to myself, well, okay, this still looks like a decent setup is here. Maybe now I'll buy the dip because overall setup looks good and risk off this 455 level. But if I pull up the daily chart in OGEN, instead of being hovering around here, is down at 240 or 230, then maybe my reaction is more like, okay, this is pretty far off of its highs. I can see on the big picture this isn't really primed to get through 290 anytime soon. Maybe I should just stay away. So I'd just say take a step back, look at a wider time frame chart, and see if you still feel like you have an edge. Here's a general question on emotions. If I had problems controlling them when I first started trading and staying relaxed, and any good tips on how to do that, I'll let the DVD answer that tomorrow on my emotions segment. But I just kind of touched on it a little bit with the last one. Hiding unrealized profit loss, hiding realized profit loss, until the end of the day, things of that nature, I think are a big help with emotions. I'll give you that one right now. This is a long one. Give me a second to read it. This question basically is asking, this person misses a lot of trades because they really want to wait for the stock to confirm before they take their entry. And basically, when you analyze your trades and find support/resistance, how long do you wait for the stock to confirm its move before entering the trade? I know this depends on the trade, but if you have some good general advice, it would be much appreciated. Well, I think you kind of saw today. There are some cases where I'll just, jump right in if I know my resistance level beforehand. The problem with trading, like here, I remember seeing somebody pose this question the other day. Trading, in its simplest form, should be something where you have a 50-50 chance. Either you're right or you're wrong. So why do 90% of traders fail? And it's because, I think a lot of these algorithms, I think a lot of the big money funds, things of that nature have really figured out how to prey on emotions of people. And emotions are really what limits a lot of traders, because they'll wait for the stock to look safe and make the emotional and make the buy, or they'll make the emotional sell into weakness when maybe it's starting to break down. So sometimes when the stock looks safest isn't the best time. That's why I don't short weakness, because I don't like shorting like a low of day crack and hammering into weakness saying, oh, well, now this must be safe, because so many times I see that move get supported and then it rips back, and then I'll end up making the emotional cover into strength. So that's why I kind of have that counter approach where I like to sell into strength, I like to buy into weakness. So I hope that kind of answers that. Like I do it to a certain extent where I do still like know my risk, have a risk in mind. I'm not just blindly shorting a spike. Like I'll be shorting a spike if I know a resistance level I want to play off of. Otherwise, I'll probably just let it spike out and wear itself down first and look for lower highs, and then have that previous high as my risk. But I like taking my entries on shorts when the stock is still strong, and I don't necessarily wait for the move to be confirmed first. These questions are basically saying, how do I keep mentally focused and how do I maintain my discipline? Well, I am not 100% at maintaining discipline. It's funny because it always takes big losses to remind me sometimes that I have to cut the small ones. I think a lot of my lessons I've learned and finally like have driven discipline home are because I've lost enough money doing something stupid that it just gets to the point where I'm like, okay, no more. I'm not going to do that again. As far as keeping mentally focused is concerned, I mean, there are definitely times during the day when I'll relax a little bit. Like I said, midday, I'll pull up TV shows. I'll kind of distract myself. I'm not just totally intently staring at charts all day long. So, I mean, yeah, I mean, if you find yourself wearing down midday, if you find yourself losing focus a little bit throughout the trading day, it's always okay to go outside, take a 10-minute walk, 15-minute walk, whatever it takes. Everyone's a little different as far as, how long they can stay focused on something. But sometimes, a little bit of sunshine in your face and some fresh air can go a long way. When I get in a trade, sometimes I find myself overthinking the trade, finding reasons why it's all wrong, and hundreds of thoughts cross my mind, making it tough to stay clear-headed. How can we overcome this? And I think the best answer to that is when you go into the trade, know what your risk level is, and then stick to that risk level. Do not let yourself fall victim to cutting losses at random points on the chart. Now, I mean, it's a little bit different on something like YRCW today, where it grinds all day instead of doing what I want. Like, I guess what I'm talking about is more in that first, 30 minutes to an hour. Because that was a big problem I had, too, is I'd buy a breakout, it'd be a choppy start to a breakout, and 10 minutes later I'd be out, when really the breakout had never failed, and then it continues up without me later. So I'm talking more in terms of trying to avoid making those quick emotional decisions just after you enter a trade. So know your risk and stick to your risk. That's the most important thing, is you got to be really disciplined about saying, okay, is my risk level still intact? Yes, then I'm safe. That's what I would keep repeating to myself. And maybe after a couple hours, if the chart is doing nothing like I want, then it's time to say, okay, I'll get out before my risk. And there's no shame in that in the world. But as far as, being out 5 minutes after you enter because it's a little choppy and scary, that's what you want to try to avoid. So just keep on constantly reinforcing to yourself, is my risk intact? Yes or no? And that's how I would go about that. Okay, some money management and risk related questions now. What are my money management rules when I enter a trade? And this goes along with, how do I decide what size to enter with, what size to use for the ads, all of that. And I answer this in the DVD in a decent amount of detail with a couple examples, but the way I'll answer it now is let's look at OGEN. We've been talking all afternoon about maybe buying a dip on OGEN, risking off a 255. So the first question you have to ask yourself is, how much money are you willing to lose on a trade? That's the first thing you've got to decide. Maybe your number is $1,000. If you're willing to lose $1,000 on OGEN and you buy at 265, that means you're risking 10 cents a share, which means you can't take more than 10,000 shares of this position. Because if you took 20,000 shares and then had to cut it as 255 broke down, and let's be generous and say you got a 254 fill, you lose $2,000 there. So it's all about taking the appropriate amount of size in regards to your risk point on the chart. I do not like having an oh shit number, as Nate calls it. I hate that, because I feel like you make so many random decisions if that's the case. I would much rather just base my size and build in accordingly along whatever my risk number is. Because if I just blindly said, I don't want to lose more than $200 on a trade, but I'm going to trade 1,000 shares every single trade regardless of how close to my risk level I am, well, sometimes you're going to be cutting losses before your risk level gets breached. So that's how I think about risk. What is my size? How far away from the stop point on the chart am I? And what does that dollar risk translate into? In general, how do you manage a losing trade? Well, you've seen a couple today so far. And generally, I have my idea of where my stop is, and if the stock is breaching my stop loss level, I'm taking the loss. If I'm being disciplined. Sometimes I don't do that, and then I get into a world of trouble. Now, I wouldn't call a losing trade just being down on a trade. How would I manage if I'm down on a trade? Like I was on YRCW earlier today. Well, if YRCW, it had its huge spike, huge fast pull. I mean, this was really good range for the first 10 minutes of the day. And then this perk up to 1930. Let's say this perk, I got my entry at 1910, but let's say this perk had gotten up to like 1970 or something like that. And it's still that fast spike. We're still only 15 minutes into the day. That's where I'm probably putting an add on, because it's closer to my risk level of 20. I'm only adding on like a little bit of size, in relation to the risk. Because, I risked $2,000 on the starter, and that was fine for a starter. I would have been willing to probably risk up to $5,000 overall on the trade. So then I would have sized in accordingly with my next however many shares, given that I was 30 cents away from the high of day. So again, it's making sure that that risk doesn't get out of control when you're adding to a stock that you're down on. But I would not keep, I guess I can't say I would not because I have before, but I do not recommend continuing to fight the stock if it does spike through 20 and say, well, okay, I'll just add it 20.50 now instead, or I'll add it 21. And if you hadn't cut your starter for some reason. Because the times that I do that are the times I get myself into serious trouble, like Lake or PBMD. So general rule is if it's under your risk, if you're willing to risk a little bit more on the trade, if like, okay, I still have room to add, go ahead and add. Do so accordingly in relation to your risk. But once that risk is breached, you're usually better off just cutting it and moving on. Because even if you get faked out here and there, you're going to avoid that occasional massive loser. The only occasion, someone asked, what occasion would you short a stock before it has made a new lower high? The only occasion I would be if it's spiking into a daily resistance level. So it's still, it hasn't even put in its first top yet necessarily on the intraday chart. But I see the daily chart, it's already spiked a long way. And I say, hey, looking back on the daily, it topped out like really close to this level. That's where I might enter in before it's even had a chance to put a lower high in. But that's the only situation in which I'll do it, because otherwise, who knows how high it's going to go. And it also does still give me a stop loss idea. Okay, I just kind of answered that one. All right, I have a question here about adding to winners. And the way I add to winners, it's very similar to adding to, well, I guess it's very similar. But when I add to a winner, the same thing applies. I'm not adding into weakness. I'm adding into lower highs. I'm adding into new tops that may be forming. I'm trying to think if I have a good example of this that I can show you. I didn't really do any adding into winners today. But the main point of the question focused around, aren't you increasing your risk? And yeah, to a degree you are. I mean, if I had shorted a stock, I mean, some of you saw my BIOC free clip, I assume. So let's just use that as an example. I shorted it at like a 401 average, and my stop was about 410. So after it's had a couple hard cracks and rebounds, would I want to put that add-on into a pop back up to 390? And I mean, maybe early on, my risk would still be off of that 410 level, and yes, I would be increasing my risk a little bit, but because that stock has already had a couple cracks, chances are it's going to keep going down, it's going to consolidate for a while, and then those lower highs are going to become my new risk levels. So my risk level is going to move down as the stock moves down. And by shorting into strength and into pops, that is going to help me keep it very under control, rather than just hammering into weakness and hoping it keeps going down. Oh my gosh, AVXL, 95 cents. Let me say this, I do not want to short AVXL right now. Someone was asking, what about shorting it? VLTC is a bust. I'm gonna get that out of here. Wow, that's a great recovery. I'm really excited about that. AVXL has the potential to go much higher, I think. This is one of the most liquid OTCs I've seen in a while. Yes, it's a straight up spike into resistance right now. It actually just barely set a new high today at 95.5. With an hour to go on a Friday, I'm not going to mess with this. It might fail around 1. It might pull back. Well, even now, I mean, this little break here, just over 93 cents. I mean, it held under 93 for the last 45 minutes, and now it's perking through. So it's not even totally straight up from the lows. This, I mean, it's a breakout chart now, and I am in no rush to short it. I really, really, really like this one next week if it gets overextended because it's so liquid for an OTC. I mean, it was trading over 10 million shares a couple of those days. So maybe my approach on AVXL, I don't even know if I want to buy it right now, just again because it's kind of quick of a recovery and quick of a move. I think I'd be a lot more likely to buy it on Monday after a gap up and risk off of green red. You know, assuming that it holds together today and Monday is new highs. And once it's through that round number of $1, that also is such a psychological level. I'd just like to see it above that. But man, I hope this is like a 2 or 3 day breakout, nice overextension, and then I would just hammer the heck out of it short once it had its first snap, green red or something like that. Or maybe even into a parabolic if there was clear level 2 action. I'll keep my thoughts on AVXL updated on Twitter next week. Although it's going to be tough. I'm going to be traveling again for the next 2 weeks after Monday. But I'll try to watch. I might have to come back and trade AVXL from the laptop. Okay, let's see. More money management questions. And I'll keep half an eye on that AVXL still. How do you recommend setting goals in trading? When I set profit goals, I usually force bad trades to hit my goal and I lose money. Yeah, that's exactly right. I don't recommend setting profit goals at all. I never had the goal to make $1 million trading. I never had the goal to make X amount by X date, really. Well, aside from one brief time where I kind of had a deal with my parents about trading full time, and I talk about that in the DVD. And that was incredibly stressful trading. But I don't like saying I have to make X amount of dollars by a certain time. I need to sit back and I'll take what the market gives me. I mean, I'm lucky with some of the setups the market has given me. Like my big Fannie Mae trade where I had that huge win back in 2013, I think it was. Like that was an incredible setup. Like I would have never expected a setup like that going into the year. So it really is just trade well and the profits will follow. I think that's the best way to put it. Trade well, become consistent at certain setups, slowly scale up as your account grows, and that is the path to success. Because if you do start setting profit goals for yourself, you're right, you will start forcing things, and that's just gonna lead to bad trading and bad decisions. Let's see, I've answered that one already. We talked about that one. What role did leverage and margin play, and how much of it did you use in growing your account from 2,500 to its $1 million level today? It really did not play much of a role at all. I've never been much of a margin trader. Like I said, I can only think of a few times I've really used it, and even those times, it's only been because that one account on its own, like, didn't have as much money in it. So my risk is really rarely ever more than the money that I have. So for example, if I have $50,000 between 3 accounts, maybe I'm margining one of the accounts and I'm in a $40,000 position, but I'm still under my total account values. So early on in growth, I was trading OTCs a lot, and you really couldn't leverage OTCs. So yeah, I was forced to stick to just my portion of the money for the most part. I think margin and leverage is very dangerous to trade with because it's just very easy for risk to get out of control that way, especially for a small account. When shorting and your risk level is breached, do you immediately get out or do you wait for a pullback? That's kind of that goes back to the nature of how I got there. If it's a really fast, straight up spike and it's spiked a long ways, if it perks through by a few cents, I'm not necessarily panicking right away. I'll probably wait and see if pullbacks are holding or not. But if it's been an all day slow grind and it breaches my risk level, I'm getting the heck out of there. Because at that point, the stock would have had time to consolidate. It would have the support it needs for that next leg up. And this is sort of a similar answer. Is it a good idea to wait to short a stock when the stock is very close to the resistance in order to risk less? Or would that be implying that since it's so close, it very well might break out past that resistance, decreasing the odds of a pullback? And yeah, I'd give the exact same answer for that. I think it depends on the nature of how it got there. So again, slow climb up, I probably am not going to be shorting into the resistance. But if it's a fast spike and it's come a long way, then yeah, the closer to the resistance, the better. Okay, moving on to some technical trading questions. What indicators do I use? Just basic support and resistance. You've probably seen that on my charts today. I'm not drawing weird trend lines. I'm not using VWAP or any advanced indicators like that. Basic support and resistance is all I need. It's all I've ever used, and it's kept things simple for me. That's the most important thing. I think you keep it simple, and that increases your odds of success. Trend lines especially have always really annoyed me because there are so many different ways you can draw a trend line on a chart by the time you get 3 or 4 hours into a day. And people just see what they want to see. So I just look at the big support and resistance levels and I keep it to that because I don't want to start just drawing all these random lines on my chart. How far out do I look for levels of support and resistance? The ones that mean the most to me are obviously on daily charts, and especially on days where there was big volume. I'll hammer that home throughout the DVD. But you have also seen a couple cases like with RJET today, where I looked at a 2 or a 3 day chart and I said, oh look, this last bounce failed 2 days ago at 540. So now today that might be a level I want to play off of. So daily chart I'd say is the one I like best, but if the stock has been moving recently on increased volume, I will look at multi-day charts and look for levels where previous spikes failed, or maybe previous dips held, if I'm looking for a long. On level 2, are there certain market makers I pay more attention to than others? There were back when there were more OTC promos. There were some market makers around that you knew were really sketchy and in cahoots with the promoters. With listed stocks, not so much. With listed stocks, I think that's something Eric Wood is really good at. He often talks a lot. I've seen him say things about like how he notices like market maker EDGX like is back to supporting the stock again. Like he noticed it last time it was supporting too. Maybe my level 2 reading on listed stocks just isn't quite at that level yet, but I'm not going to say it's impossible to notice things like that on listed stocks, but it's not something that I've really started doing yet. They say you come up with a plan for every trade you make. How can you make a plan for a take profit target when you don't know how far the stock will go? Do you make plans for trades that mention what will be your take profit target? I'd say one of my biggest weaknesses as a trader right now is knowing where to take profits. Usually it'll get to the point where I'll be up a decent amount on the trade and I'll start just randomly covering into dips without really thinking about where we are on the overall chart. One thing I'm trying to do to get better about that is, if I look back on the chart a few days and say, okay, today's the first red day on this overextended chart. A couple days ago, there was a lot of support at $3. So I'd like to cover my 350 short down just above this $3 support area. That's one case where I might set a take profit goal, where I say, okay, I think that this could support here again because it did the other day, or maybe even because it did earlier today. So I think that kind of answers that question. That's how I'm trying to start thinking about it more and trying to get better at. If you were working a full-time job and had to trade on a mobile app, how would you screen for stocks to trade during the day? I'd probably go to finviz.com on my phone, and I'd use their free stock scanner, and I'd look for stocks that were up maybe 10% or more and had volume of 1 million shares or more. I think that's about as advanced as you can get with FinViz. You know, compared to the typical scan I run. But that's what I would do to find the top percent gainers. The one downside of FinViz is they don't scan for OTC stocks, listed only. Can you describe the difference between your mindset when trading OTC versus NASDAQ? Your philosophy used to be you only trade from charts. When trading NASDAQ penny stocks, are you still biased in thinking that they are all inherently failing companies? And can you elaborate on how you use level 2 on these two markets? I'm not quite as biased on NASDAQ as I am with OTCs, that they're all failing companies. I do think a lot of these lower priced NASDAQ stocks that run, such as NETE, are very distressed in like just a small notch above OTC. Because you look at the daily chart, and it's faded the way it has for a reason. I mean, that's no accident. Good companies don't get charts on the daily time frame that look like NETEs, where it goes from $4 down to 12 cents. So I kind of let the daily chart tell me a story. Let's see what else. Oh, so the difference between OTC and NASDAQ when I'm trading them, OTC I will let myself short weakness still in some cases. And that's just because of the nature of executions when it comes to OTCs. The fact that usually you get some decent panics because people are trying to get out and they can't get the fill. So I think that sometimes they're a little less likely to support weakness on the OTCs if it's an overextended chart going green-red, for example, or having a multi-day support crack. But with listed stocks, I'm a lot more into only shorting strength, only buying weakness. And can I elaborate on how I use level 2 on the two markets? I'll let the DVD explain that because there's a segment showing OTC examples and a couple showing NASDAQs and how I would think about level 2 in these cases. I think I've answered this already. Well, here, I'll answer it again. The question basically is saying, can I explain exactly what I mean when I say price action? Like, oh, the price action wasn't right or something like that. And basically, I'm just referring to the chart. I'm referring to what is the chart doing compared to what I expected to happen. That's kind of my definition of price action. Somebody re-asked that they don't understand the difference between ETC and Wedbush. I went over that probably an hour or two ago. So if you're still confused, go through the webinar again and look for that because we already covered that one. Oh, FinViz, I'm sorry. I've been saying it and I haven't been spelling it. It's FINVIZ.com, and I'll link it for everybody to read here. There you go. And then you just click the stock screener button up top on the menu or something like that. Would I say NASDAQs are harder to trade than OTCs? I mean, maybe a little bit. I remember how easy those marijuana stock plays were in the OTC market a year and a half ago. So NASDAQs are definitely a bit more challenging. They're definitely choppier. But I think I guess maybe I don't answer as emphatically yes that NASDAQs are harder because I'm getting more comfortable with them. And I have a few strategies I really like with them. I think NASDAQs are more difficult if you're trying to play the obvious moves. like shorting a low of day crack or something like that. That's when I think they're more difficult. How can you access the webinar when it's over? Well, I've got to save a recording of it, and then it'll be posted eventually. I guess I can't say exactly when it'll be posted. That's kind of in Profitly's hands. I'll send the recording their way, and hopefully it's up quickly. I've answered this already. Let's see. We've kind of answered this, but I'll answer it again. When you enter a trade, is your position profitable pretty quickly? I see your winning percentage is 72%. When I enter, I'm sometimes profitable pretty soon after I enter, but more often I'm fighting with my position and burning commissions to keep my risk and size under control. When you enter your trade, is your position quickly in your favor? And if so, what are the indicators that will help you enter and manage your position? And my answer to that is I'd say it's probably about 50-50 how often I wind up starting off down a little bit on a position versus it's immediately in my favor. The issue, again, just all comes back to where is it in relation to my risk. So I'm okay being done on a position. I don't need to enter in and out and burn through a bunch of commissions if it's under my risk level. I can just sit back and try to trust the chart. And if I have to cut it at my risk, which sometimes I will, that's okay because I'm sticking to my plan. That's a good loss to take. And as long as I sized it appropriately, I don't mind. When the resistance line is off a whole number by, say, 10 cents, what do I play off of? Such as VLTC, because today resistance was about 8.90. That's a good question. I always kind of wrestle with that a little bit myself. Since, I know $9 is a round number, but it's not exactly a super psychological number. Maybe if it was like the resistance was 9.90 and it was off of 10, then maybe I'm saying, okay, I'm going to risk to 10 instead of 9.90. I guess it's kind of case by case for me. So sorry I can't answer that a little more detailed. Okay, 1 second here. Let me read through this one. It's a little long. Okay, here we go. So here's a scenario someone pitched me. Let's say I enter a trade at $8 with a mental stop loss at $7.80, and I know there's a resistance level overhead at $9. So question 1 relates to taking profits. If the stock moves higher, forming higher highs, higher lows, and it gets up to about $8.80 before finally starting to chop around and go sideways, the question is, would I take a profit at this level, or would I wait for a pullback to take the profit and sort of treat that as like almost like a cutting a loss type idea? Or would I be patient and aim to take my profit near that $8.90 to $8.95 area, just below $9? If I had a spike that went from 8 to 8.80 and I knew resistance was at 9, I would very likely be paying myself a little bit inside of that resistance level. That's close enough for me. Now, the part of the question I really want to emphasize here is that I would not sell into a pullback, because that pullback could easily just be a dip back down to 850, 840 consolidation and then ramp back up and break later. So I'm not going to chase weakness in that situation. If it has a hard pullback off of 880, I can always sell into the next pop. Sell, the lower high off of 880. But when I'm exiting a position, even if it's a profitable position that I'm long, I do not let myself sell into the weakness. And then question 2 is regarding to if you had to stop out. So if the stock falls below $8 and is trading in the 787 to 792 range, do I start cutting my loss, or do I wait for it to touch that 780 stop? And that is again a little bit in relation to how long it spends there, sort of like YRCW today. I'm not going to take that loss if it's only been like 20 minutes or 30 minutes. But if it's been a couple hours and it just cannot perk up and show any kind of signs of life, that's when I'll start thinking, okay, maybe I need to start getting out of this a little bit earlier instead of waiting for support to snap on me. Okay, here's a couple that are very similar. And basically what they're both asking is, let's say I'm trying to buy a breakout, or let's say I'm trying to buy a dip buy. How do I know it's not going to be fake? Like, how do I know that support won't just crack if I'm buying a dip? How do I know that the breakout won't just stuff and fade back off? And the answer is I don't. The idea is I'm trying to put myself in a high odds situation or a situation with favorable risk reward. In both cases, I'm going to go in with a plan of where to cut my loss, and that's that. I'm going to give the chart a chance to develop and do its thing. I'm going to give my plan a chance to work. I'm not scared about getting faked out because, you know, if I have to cut the loss, then I've sized in appropriately. I'm prepared to do that. You're going to have those times where breakouts fail. You're going to have those times where dips don't recover and keep dipping. No setup you're ever going to trade is 100% success rate. So it's just a question of, are you okay with potentially being wrong in this situation? And in order to make that answer yes, it's really just all a question of sizing it appropriately. Here's one I wanted to touch on. How to spot the very moment of a stock spiking during the afternoon of 2 to 4 p.m. During the afternoon, some stocks start running either up or down, usually being led off by a relatively big volume spike. And the reason the person has seen this is they said, I saw Tim Sykes give alert on some stocks during afternoon hours, and his entry level was very close or right before the big volume spike. And that's no accident, and that's not natural price action, because we talked earlier about how subscribers of big services are going to chase. And that's why that big volume spike happens. It's not that that big volume spike is predictable. It's not that, you know, you can see something and say, oh, there's about to be a big volume spike. The big volume spike happens because a bunch of impulsive subscribers just saw that a guru bought a stock and they want in too. And then they chase the price up on top of that. So that's why, you know, maybe you're trying a stock on your own. It looks like a very similar setup, but that volume spike never comes, and that, you know, that big spike up never comes because no guru ever alerts it, and there's never that rush of buyers coming in also. So that's something you have to keep in mind, especially with more liquid stocks. So unfortunately, I can't really tell you how to time getting in right before a big spike, because as far as I'm concerned, it's not really a natural market phenomena. And again, I'm not, you know, as far as I'm concerned, the fault lies a lot more with the subscribers who choose to chase than with the person who alerts the trade, because, you know, any guru who alerts their trade to a large chat room, I mean, they're trying to teach. They're trying to teach and show, like, hey, I'm entering the stock here. Here's why. And, you know, some people, instead of learning, just try to follow. Yeah, OGEM, that got ugly. So good thing we got out of that long earlier today. Let's see, I basically answered that. What else do we have here? How do you time your entry in a breakout strategy accurately? Most of the time I get stopped out because the breakout turns into a double, triple, sometimes quadruple top. Yeah, like we discussed, sometimes breakouts, they're just not going to work. And I talk about in my breakout chapter a lot about like how, let's say even OGen, for example, like this was kind of a rare case because 265 held perfectly after it broke through. But in a lot of cases, they're going to be choppy at first, and they're going to like break past 265 and dip back to 260 or 258 or something like that, only to recover and be okay later. So I talk in the DVD about where I'll base my risk and how patient I'll be. And again, it's just a matter of knowing where your risk level is and giving it a chance to work. And hopefully more often than not, it works. Someone said some breakouts are long opportunities, some are shorting opportunities. How do you tell the difference? I really do not like shorting into breakouts. Even OGEN today, where it has faded off 50 cents a share from its highs, I would have felt like that was a very risky short, shorting up in the high 280s or even in the 270s when it was still above that breakout level. Because, breakouts, those can be the starts of major squeezes sometimes. I've seen it happen a lot of times where this thing will keep going to 350 or 4. And if you were banking on it being one of the fakes, you're screwed. So, one thing you can do is wait for something like OGEN where it kind of fails, looks ugly, and then has that push back into a previous resistance area and short that considering it a lower high, risking off of the high from earlier. But in general, I'm not shorting a stock on its breakout day. That's just kind of my approach. I feel like it's a little bit safer that way. A big part of the reason my $290,000 Lake loss was possible was because I failed to recognize that it was a breakout. And because I failed to recognize that, I got squeezed like crazy. That one I'll skip. Let's see. When I short a spike, I look for one red candlestick and then I wait for the second one and then I short in. Is this the right way to, or the way you would do it to confirm that it's dropping? I like waiting to see weakness first, but I don't like chasing the red candles. I don't want to shorten that two red candle dip weakness. I'd much rather see it have those couple red candles, that weakness, that little hard crack of sorts, and then short the next time it's strong, so I get closer to my risk level, which would be the current high of the day. Oh, here's a quick side question. Does SureTrader hold your money for 3 days after buying a stock like Ameritrade does? Chances are you have a cash account at Ameritrade. Cash accounts, the trades take longer to settle. If you had a margin account, the funds would become available next day. And I think that same thing applies to SureTrader. So I always recommend everybody get a margin account. That does not mean you have to use margin. You do not have to use leverage. You do not have to short sell. But just do it for the quicker settlement periods. That's my thought. Okay, we are nearing the end of my Word document full of questions. The final little category here is finding stocks and plays, and questions relating to that. So how do I find and choose the stocks I decide to trade for the day? And that is basically just a pretty simple process I go through every night. I have a few scans that I will run, which I teach you about in the DVD. Basically, just looking for the stocks that are up the most, the stocks that are the most liquid, that traded the most volume. And usually I'll get spat back to me a list of about 10 to 15 stocks per scan. So then I take those tickers, I punch them into daily charts, and I look for daily chart setups that are familiar to me, that I think I might have an edge with. If I like the daily chart setup, I add it to my watch list, I type out a little plan. If I do not like the daily chart setup, I just ignore it. And that's really all that goes into my nightly watch list preparation. So you'll see more details on that tomorrow. And this one is basically answering the same thing. How do you make chat rooms work in your favor? I was enrolled in IU's chat room and currently in Tim's, but they're distracting me. Do you only use them periodically to validate a trade or to come up with trading ideas? Yeah, for the last year especially, I have barely been in chat rooms because you're right, they do get distracting. That's a nice thing about once you become kind of self-sufficient is you're finding these stocks on your own, you're finding these plays on your own. You don't really need that anymore. Now, I will still hang out in Investors Underground during the day and see like if Nate is issuing warning after warning about some low float stock that's really spiking. And it is good to be in the rooms here and there just to see, what stocks get mentioned. Every now and then, a stock gets mentioned that I completely missed, that I didn't see for some reason. And so it's always nice in that sense to see a play that you might not have seen otherwise. But I'm never trying to follow trade alerts. I'm never trying to follow anybody else's plans. I basically use chat rooms as a tool to find a stock that I'm curious, like to find a new stock that I might have missed, but then from that point on, I'm building my own plan about it. The one thing that I think also pushed me away from chat rooms a little bit is that I've had a lot of experiences where I'll see differing opinions than mine, and it will cause me to second guess myself. And I hate that. I really, really hate that. I would much rather trade my own plan, stick to my own plan, and fail on my own than get shaken out of a trade because I saw somebody else saying so. I feel like that's part of what's made me better as well. So sometimes, you know, I still like will read Nate's scan every night or something like that. And sometimes I see Nate talk about a stock that's on my watch list and his plan, like maybe my plan is to short sell it and his plan is to buy dips. And then I'll start saying like, oh man, like, am I on the right side of this? And then the next day I'll freeze. And, you know, I'd say maybe more times than not, my plan would have worked out just fine. So I just hate having that extra noise. I hate having all that clouding my head. I like to make my own plans, and I like to have conviction in what I'm doing. And if I'm going to be wrong in something, you know, eventually I'll learn my lesson. So I'm not going to, I mean, just to conclude, wrap that up, I definitely don't think that chat rooms are not useful or anything like that. I'll never say that. Again, like I've received a ton of help from Michael Good and Tim Alerts back when I first started. Like that was, I wouldn't be where I am without having been in a chat room and talking to Michael all the time. So, I mean, check it out, but use it for the right reasons. Use it to ask questions and learn from others. Use it to see new stocks that might be coming up that you missed, but don't use it to trade other people's plans. Do you have a threshold for how thin a ticker can be for you to be interested? Sometimes there are millions of shares being traded for an OTC, but the real dollar volume is pretty minimal. And that's why I look at dollar volume more than number of shares. Because if you have a stock that's trading at 5 cents that's traded 1 million shares, that's a totally different thing than a stock that's trading at $3 that's traded 1 million shares, especially on the OTC market. So I care about dollar volume that's going through, and I care about number of trades. How frequently are trades going through on it? And those are the two main things I'm looking at when it comes to liquidity. And you'll see that more. Well, here, let me see something really quick. Maybe I can... So here's my OTC scanner right now. I just brought it up on the screen. This is what I'm running intraday. In one of the columns, you can see the number of trades that has gone through on a ticker. So today, AVXL is by far the most liquid. It's had over 1,500 trades go through. People deciding to either buy or sell the stock. A lot of these are a lot lesser. Like this one that has 122, I'd probably just see that and say, okay, I'm not even going to pull that chart up. I don't care. And the filter I have running for it is based off of dollar volume, not number of shares traded. So I don't really look too much at this volume column. I will look at the number of trades far before I'll look at the number of shares traded. Okay, back to Thinkorswim. That scanner is Equity Feed, and I talk about that one in my DVD quite a bit. Okay, I'm cheap when it comes to investing in tools. I have no problem with investing in my education, obviously, but I'm trying to find the most economical tools. Any suggestions on that? Like, what are the absolute basics that a trader should have? Currently, I use Thinkorswim for charting and even Level 2, but I've supplemented Level 2 with iHub mobile account. My actual trading account is with IB, but I'm under the pattern day trader rule. I guess, you know, tools I use every day that I feel like I have to have. I have to have a good Level 2 feed. I don't like Thinkorswims. I really don't. I get mine through DAS. It's unfortunate because I don't think IB really has a solid Level 2. I could be wrong. Or maybe it's just that they don't for OTCs. But it's nice because I make enough trades per month at Speed Trader that they negate the cost of the DAS Trader Pro, which is where I get my level 2 from. I think everyone should have a scanner. Now that doesn't mean you have to pay for a scanner, like Stocks to Trade or Equity Feed or something like that. You can, there are free options. Like I said, you can probably run very similar scans to me on FinViz. You might have to do a little bit more work weeding out some of the bad plays because like FinViz, I don't think there's a dollar volume filter. I think it's only number of shares. So you might have to do a little bit of work running those scans, but it's a way to save a buck if that's what you want to do. But aside from scanner and charting software, I mean, Thinkorswim is free charting, and I love it, so I will always use that. Yeah, level 2, charting, and scanner. Those are my 3 main things. I think that's the essentials. All right, let's see. A few more here. And then I'll jump back in chat until market close and see what I can catch up on. Okay, this question, I'm going to make this one a little bit shorter. This person's talking about how pre-market they're looking at stocks that are up 5% or more already, and they can easily find a list of 20 tickers like that. And then it's really hard to narrow it down to 2 or 3 symbols to monitor at the start of the day. And I think the issue there is that you're casting too wide of a net. I would say instead of scanning for stocks that are up 5% pre-market, maybe make it 10 or 15. So narrow it down that way, the ones that are gapping up more. But again, be careful buying those because so far, at least in what I've tracked, it has not been consistent success as far as running throughout the whole day. But if I'm running any scan that is returning too many results, I either narrow it down by increasing the volume requirements or the price requirements or the percentage requirements. So cast a little bit narrower of a net in the first place depending on what criteria are important to you. Okay, what is your pre-market preparation process? I myself use a market scanner to find the pre-market movers. Then I check the news of the highest movers to find if there is a solid catalyst or not. After this, I check the shape of which the pattern is forming on the chart, like a bull flag or a flat top breakout pattern without much retracement. Finally, I check the particulars of the stock. What is the float? What are significant support and resistance levels? Are there any large like windows in the stock price, like gaps? Could you tell me more about your process? And that sounds like a really, really solid process to me. That actually does a little bit more than even I do because that looks a little bit more at the news. And I'll check the float sometimes. I'm not great about it. I probably should do that a little bit more. But yeah, it's very similar for me. I find a stock on my scanner. I look at the chart. I find important resistance. I find important support. And then I try to plan some plays, based off of that. And that really is, I mean, it's not rocket science. Like I don't complicate things too much. So that sounds like a pretty good morning approach to me. Do you always rely on your own screening process or do you sometimes look for opportunities found by other folks? This goes back to the chat room thing. I mean, I say I look mainly at stocks that are up on the day. Oh, AVXL having a nasty pull. Well, a good example of how I was helped the other day, just keeping an eye on Twitter, keeping an eye on chat rooms, IMMU. It had this big gap down from 370 down to 180. So this is a red day. Even though it put in a big green candle, which is kind of the type of candle I like to see with increased volume, it was still down on the day. So my scanner missed it. But because I saw other chat rooms talking about it, it hit my radar. Again, I did not try to trade anyone else's plan on it. I don't think I ever even made a trade on it. But point is, it came to my attention, and it was something that I had missed on my own. How many tickers do I watch out of the gate each day? Do I try to focus on one or two, or do I keep a wide watch and then zero in on my opportunities? Let's see. Typical day, I'm probably watching 3 to 4 tickers out of the gate. It really depends on the caliber of setup it is. If I feel like there's like a major, awesome home run setup to start off one morning, that is probably my sole focus. I might miss a lot of also decent setups because I'm so focused in on wanting to nail this one because I think it's such a big opportunity. So it depends what else is out there. It depends how good the setup is. But on average, I'm probably looking at 3 or 4 a morning. Are there certain tickers like Fannie Mae that you would always keep your eye on? No, there really aren't. There was a while where Fannie Mae had an honorary spot on my watch list, like under the keeping on radar section. And I would just kind of keep half an eye on it every day just to see where it was on the daily chart. But at this point, it's been boring for long enough that it's kind of lost that position. So I'm really just moving around ticker to ticker, day to day. What's hot, what has a chart pattern I like, and once it no longer fits those criteria, it's off my list. And finally, after you create your watch list the night before, how do you narrow down what you could trade during pre-market or at the open? What helps make your decision? Let's see, that's basically the question. What indicators help narrow down my decision for potential trades? And a big part for me is what way is it gapping? Because I do make my watch list the night before I really know which way is the stock going to gap. I mean, this morning we were talking about GEVO, we were talking about WPCS, we were talking about QUIK. All of those I had on my watch list. I wanted them to gap up. I wanted them to spike into yesterday's resistance. None of them did it. And pre-market, I had a pretty good sense on at least 2 of them that they weren't going to do it. So that makes it easy for me to narrow those down. I can see, okay, these are gapping down. I can put them on my charts that are a little further off to the side and not keep quite a main eye on them. And I'll focus on the ones that are having the gaps and look like I might be setting up for those ideal plays that I had in mind. Do I make my watch list for Monday on Friday after the market close? Usually I'll just do it Sunday night. I don't always do it immediately after close. Right now, roughly what percentage of my trades are short? Gosh, I'd say probably 85% at least. But when I do choose to buy a stock, usually it's a pretty solid setup. Okay, so there goes the questions you guys sent in. Thank you all for sending those in. There are some really good questions in there that I think clarified a lot. If I missed your question and you sent it in, chances are it's in the DVD. I don't think I missed any. I was pretty sure I got them all included. So sorry if I skipped yours, but you'll have your answer tomorrow. So let me just scroll through a couple of these questions really quick. We'll take this till market close, maybe a few minutes after, and then I'm going to call it. I think I'm starting to lose my voice a little here. Okay. I'll just scroll back a little ways really quick. I'm trying to find ones that I don't have answered in the DVD. I answered that one. Do the different colors on the market makers mean anything on level 2? Yeah, I mean, it's the color is based off of what price level are they at. So right now, YRCW, the 915 sellers are all yellow because they're all at the same price. They're all the best selling price. The next level up is green at 918 for me. Now 916. So that's it. It's just a way to kind of make it a little easier to see who's at what price. Someone was asking about the level 2 on AVXL. Sorry, I missed that. During the first few minutes of market open, do you watch level 2 or charts more? Definitely charts if it's a listed stock. If it was an OTC, probably level 2. Do I ever hold a stock for less than a minute? Very rarely. I'm sure there's been a couple times this happened where there's just been an immediate move that it was too good to pass up on taking the profits on, but usually I think my philosophy is if it has that hard of a move, it's going to have a weak rebound and then have another leg down. What about entering or exiting positions near the end of the day in anticipation of a gap up or gap down? Do you use this strategy? No, not really. Most of my trading is in the morning. I'm not really scalping stuff like that at the end of the day, trying to take advantage of a little emotional move. I'm trying to only trade if there's a big picture setup there that I really like. And unfortunately, most of those usually play out early in the day. Is this webinar going to be on the DVD? Anyone who, I mean, you guys will all have access to a recording of this webinar. I'm not sure if it will be linked in the same place as the DVD on Profitly, but you'll have access one way or another. Answer that one in the DVD. Would you say in order to grow a small account, you need to be willing to accept larger losses in order to have a worthwhile risk-reward ratio? No, not necessarily. I mean, you don't ever want to lose a huge chunk of your account on one play. And by huge chunk, I mean, I guess when I think about it, like if I look back to my $1,500 account, I think I would have been distressed if I lost about $100 on a trade. Like that felt big to me. But it also kind of depends on what your win rate is. I mean, when it comes to risk reward, I kind of mentioned this earlier, but I know I see the number 3-to-1 risk reward thrown out a ton. And I don't believe that that is necessary in order to be successful at trading. I mean, if your win rate is 50%, yeah, you probably want to have a 3-to-1 risk reward then on the setups you're trading. But if your win rate is 70% or 80%, you'll be fine if your risk reward is a 1-to-1. I mean, you could have a setup that wins 95% of the time and be risking more than you stand to gain and still come out ahead in the long run. Someone said, can you repeat the chat room name again? Perhaps send out a link. Can you clarify? Oh gosh, and you don't know what the name was. I'm not sure which chat room you're talking about. Was it Investors Underground? That might be it. I do still have my monthly memberships with Investors Underground and Profitly, even though I don't really use the chat rooms too much anymore. Still nice to pop my head in there every now and then and just see what's going on. When scanning at night for your morning watch list, what is the minimum number of trades you look for to consider a stock? For OTCs, it's 400. For listed stocks, it's 3,000. And those are both numbers that are probably still a bit on the low side that I'd like to see higher than. But that's where my scan parameters are set. My issue with Centerpoint is how expensive it is to have an account with them. I have the cash, but want to start trading small, so the 200 per month is hard to overcome. Do you have another recommendation? Maybe SpeedTrader Pro, their ETC clearing. And I don't know, like the nice thing about SpeedTrader is, like let's say it costs $150 a month for their DAS trading platform. If you trade $150 worth of commissions in a month, then I think they say you don't have to pay the DAS fee anymore. That might have changed a little bit since back when I first started. Maybe it's like $300 now instead, but you have to trade 300 to wipe out the 150, something along those lines. But I know like other brokers, I don't think SureTrader offers that. I don't think Centerpoint offers that. So, I mean, a broker where you can pay off the platform with commissions is nice. I definitely recommend everybody be a platform trader, as in like download the application to trade with for whatever your broker offers. One thing that always stuck with me that I heard back when I first started trading is Michael Good said the quote, "Web-based traders are losing traders." And that stuck with me, and once I finally did get SpeedTrader and their DAS trader application, and I saw level 2 for the first time, I saw how blind I had been trading. So just something to consider. I mean, a big part of trading is having the right tools for the job. Like trading OTCs back in the day without level 2 was like trying to hit a baseball pitch with a blindfold on. And I know that's like less of a big deal now since OTCs are a little quieter and listed stocks level 2 isn't quite as useful, but I still think it's good to have. Do you type in limit prices using the keyboard and adjust prices 1 cent up and down using buttons? I have hotkeys. I have hotkeys where you can set up within your broker. I know every broker application is different. And this is another thing you can do with platforms that you can't do with web-based trading, where I have something set up where if I hit the F1 key, that'll put in a short sell order on the ask for 10,000 shares, for example, through whatever market maker I tell it to. And then even within that hotkey, I can tell it and make it show this many shares so I can hide my size within there also. And they're not too complicated to build within the brokers. And oh man, I think I included a segment on this in the DVD. I really, really hope I did, because that was a bad omission if I forgot that. But I think I got that in there. But it is slightly different broker to broker. But even if you watch your platform tutorial, that'll teach you how to do it. Whether you're using DAS Trader with SpeedTrader or Sterling Trader with Centerpoint. Question is, do I think OTCs will make a comeback? I'd be surprised if they stayed down forever for sure. I mean, I know regulation has tightened a bit, and that's part of the reason it died off in the first place, but I can't remember the last time I saw a high-profile OTC halt. It's been at least a year, I think, now. There are fewer promoters out there right now, which is a bit unfortunate. But, you don't necessarily need promoters. When the marijuana craze happened, it's not like those stocks were being blatantly pumped by newsletters. It was just a lot of dumb momentum buying. And it probably is just a matter of time until the next dumb momentum sector hits on the OTC market. And that's part of the reason I chose to keep OTCs in my DVD, was because, I mean, some of my biggest trades come on the perfect OTC setups, and I want to be ready for next time it does come up like that. if you were starting, what kind of job would you get to cover living expenses, and what would be your availability to go to the job to pay the bills meantime? I always thought about this because back when I first started trading full time, so right after I graduated college, I was up probably $3,000 or $4,000 at this point, and I'd moved back home after college to live with my parents, and I basically had to convince them, hey, I'm not going to go get a job. I want to trade full time. And so the deal was by the end of March, so I had one quarter to make $10,000, and that was more money than I had made up to that point trading. And the agreement, it basically was like, you need to show us that you can actually do this and, actually make like some kind of a decent living. We figured $40,000 a year pace was about on par with like what a starting salary would be. And I thought about this a lot during that 3-month period. Like, what if I fail? What if I don't make it to that 10 grand? What's my next move going to be? Because they won't support me living here and continuing to trade. And my next move, I think, would have been moving out to somewhere cheap, so I had low living expenses, and like tending bar at night or something like that. Some kind of a night job that wouldn't cut into trading hours, but help me out with paying the bills and keeping me afloat. So that's what I'd be looking for, I guess, is something that doesn't cut into trading hours too much. I've had a couple questions about people asking if I'd be willing to meet up in Colorado and stuff like that. And I mean, I do like meeting people for lunch and stuff every now and then. It is cool to put faces to people. Some of our best friends out here was a fairly successful trader in Investors Underground who I met, and we got along great with him and his wife. But unfortunately, I'm going to be in Denver for probably like one more week and then moving, because I spend the next 2 weeks out east traveling again. So that week is going to be spent packing, and I'm just not going to have much time. So I mean, if you live in the like Western Slope area of Colorado, I mean that's 5 hours away. But if you live out that way and ever want to meet up for lunch or something, shoot me an email at tradetheticker@gmail.com, and as long as you're not crazy and gonna stab me, I'd be happy to meet up. Let's see, answer these. What would I do if I were an overseas resident and I couldn't get a free tool like Thinkorswim because they don't accept signups from other countries? Oh gosh, I don't know what my next real-time charting software would be. I've never really had to look at any others. I'd probably just use my charting software through DIS Trader. I think SureTrader takes overseas people, and their platform is DIS Trader. So yeah, that'd be the charting I would have to use. Was I expecting OGEN to go higher, or is this typical breakout, or is this the typical breakout in this type of market? I definitely was hoping it would go higher. I mean, this is a nice little rebound off of 240 right now, so maybe it does close and continue on Monday if it gaps up. But I would consider this for the most part a failed breakout on its part, even though it did run 10% first, and that's why I made sure to pay myself a piece early, because some breakouts do fail. I was hoping it would get through 3 and have a nice run, but I was a little bit more wary of it than I would be of a typical breakout, because I went back on the 3-year chart, or 2-year chart or whatever it was, and we saw that it's not like it's at all-time highs. It's, yeah, there we go. It's not like it's all-time highs. There's still all these levels overhead from previously. Like the 3-year high is 465. Granted, it's not on really high volume, but it's still, I think, psychological to a degree. Yes, I give the names of brokers I use in the DVD, and some that I don't use, they get honorable mentions. For someone trying to save on the cost early on, would I recommend getting equity feed? Is it really worth the extra money? And I'd say if you really want to try to save money, then do just use FinViz and do a little extra work weeding down which plays are liquid and not when running your watch lists at the end of the night. Your scan results will shoot a little more your way. That's garbage. It'll cast a little bit wider of a net. But if you're diligent and go through charts, maybe just spend 5 or 10 more minutes on it per night than I do, but it'll serve the same purpose and it'll save you some money per month. And Interactive Broker level 2 for NASDAQ, I don't have experience with it, so I don't know how good it is. I think I've heard that it's good, level 2. But the issue is if there's ever a great OTC out there, you're going to be trading that blind. Am I under any contractual obligations since I made $1 million during the Millionaire Challenge? No contractual obligations that I'm aware of. Although I probably should reread the form I signed when I joined. But no, I've never heard of anything like that come up. Interactive Broker charting, there's another question regarding that. Another thing I just have no experience with. I don't really know how it is. I feel like I used to hear people complain about their charting a lot in chat rooms though. Like there'd be a bad print and totally throw off the chart for the day and it wouldn't get removed. I don't know. But yeah, sorry, I can't tell you too much about their charting. How much do I pay for DAS Trader Pro? I think it's probably about $150 a month, but because I'm doing it with Speed Trader, I trade enough there and generate enough commissions that the cost is wiped out. Would I look to short OGEN on Monday given its price action today at a spike towards today's high of day? Depends how it gaps. This is closing kind of strong, so if it opens at like 280 or 285, I don't think I want to short it risking off at 290 because that would be just way too likely to squeeze through for me. But if it opens a little bit lower, maybe gaps down a little bit or just like barely a gap up, I might short first push up towards 290, see what happens. Someone asked, wouldn't it be better just to do a scan pre-market than doing it at night the day before? You could definitely argue that. It might save me a little bit of work narrowing stuff down in the morning or having things on my watch list that no longer really apply. But I like to do it the day before. I like to have an idea of what I'm looking at going into the next day. It's kind of nice just to go to bed thinking about it. All right, well, we're right about at market close, and it looks like I'm just about caught up on questions here. So we're going to wrap this up. Thank you guys all so much for your business, for checking out the DVD. I really appreciate that. Thank you for tuning in today. I hope that you all had a great time in here and that it was educational. It was a lot of fun for me as a presenter, so this might be something I have to look into doing a little bit more often. But anyway, I hope you guys all love the DVD tomorrow. I hope it really shows that I put a lot of time into it, and I hope that you guys get at least a few things out of there that trigger some aha moments. So I'll post something on Twitter once there's a live link for this, or I'll find some way to alert people. Maybe you'll get an email from Profitly. But again, thank you all for tuning in, and hope you all have a great weekend.